The world's second-largest economy is quietly sliding into crisis. This is not a war. This is not a pandemic. This is not a sanctions crisis either. This is a financial breakdown coming from within. And if that's true, the consequences may not only shake China but the entire world. But first, we need to ask, is China really collapsing? Or is this just an exaggeration by Western media? The real answer may lie somewhere in between. Welcome to Finance Library of History. Here we talk about money, power, and history, and nothing is ever as simple as it first appears. Over the past 30 years, China has written one of the fastest growth stories in human history. It transformed from poverty into a global manufacturing powerhouse. Billion-dollar cities were built from scratch. It became the factory of the world. But what was behind this growth? Cheap labor, state-backed credit expansion, and a massive real estate boom. In China, real estate wasn't just an investment. It was a symbol of wealth, a symbol of security, a symbol of social status. And everyone believed the same thing: prices never fall. Does that sound familiar? Local governments sold land. Companies borrowed heavily. Banks extended credit. Citizens poured their life savings into apartments. And as prices kept rising, the system accelerated. Until 2020, the government attempted to limit debt through the 3 red lines policy, but that move triggered a chain reaction. The credit tap was turned off, projects stalled, and major developers began to collapse. Evergrande, $300 billion in debt. This wasn't just a company, it was a domino. Then came Country Garden, then others, and today hundreds of projects remain unfinished. Now here's the critical question: if 30% of a country's economy depends on real estate, what happens when that sector starts shaking? The problem isn't just housing. The problem is debt. China's total debt stands at roughly 280% of GDP. And much of it sits in opaque local government financing vehicles. In other words, the situation is more complex than it appears. Even more dangerous is the erosion of trust. People in China are now asking, will the home I paid for actually be delivered? If trust breaks, the economy doesn't just slow down, it freezes. Then there's demographics. China's population is shrinking, the youth population is declining. The elderly population is growing, and we have to ask, if the population is shrinking, who will buy millions of empty apartments? Japan went through this. In the 1990s, its bubble burst. The lost decades began. But Japan was already wealthy at the time. China is aging before becoming rich. Now let's look at the global dimension. China is the largest trading partner of more than 120 countries. If China slows down significantly, commodity prices fall, supply chains fracture. Emerging markets tremble. Global markets become volatile. The 2008 crisis began in the United States and shook the world. But what if this time the epicenter is China? Would it be smaller or bigger? There is an important distinction here. Economic slowdown does not equal collapse. China has strong state capacity. Its banking system is largely under control. Capital movements are restricted. That makes a sudden Lehman moment less likely. But a prolonged stagnation, that is a very real possibility. And now the final question: what is the legitimacy of the Chinese Communist Party built on? Economic growth. So, what happens if growth permanently slows? What happens to the silent contract between society and the state? These questions remain unanswered. The truth is this: China will not collapse tomorrow morning, but its growth model is undergoing a serious stress test. And the outcome of that test may shape not only China but the economic balance of the 21st century. The real issue is this: is this a temporary correction, or the beginning of a long stagnation? Time will tell. But history teaches us one thing: debt-fueled bubbles eventually confront reality, and reality always wins. If this analysis gave you a different perspective, consider subscribing to the channel, because economics is not just about money. It is power, it is history, and it is the future.